So welcome back. Now we're talking on how to set your trade. We have touched more on these in topic theory, so I'll just be doing more of a review of what we have done in topic theory. Probably for those who might be getting this video separately. Network is kind of down. Okay, so I'll be in my trade account. So you can see the coin we set earlier today when we're doing topic theory. This particular Solana is already in profit. Remember, we set it at 1.3, so already at 0.4% above the level we set it. So once it gets to the 1.3, we take profit. Same thing here, this particular coin. So when you want to set a trade, like we said earlier, you come to quantitative. So you go to quantitative and it's quite simple. You pick whatever coin you want to set. So let's imagine I want to set dot, local dot for example. So I will first of all need to come to trade settings. I'll click on trade settings. So the amount I would want to use in entering the market, like I said, it's more of a personal strategy, but what I'm using for now is I use $100 to a coin. So if I want to trade a coin, I just make sure I have like 100 USDT to be able to buy the initial amount and like 9 dips. So my instruction is to tell the bot to use $10 first of all to enter the market, and at the subsequent dips it buys at $10. So I'll click here. Remember the first one is $10, so we have $90. So I'll click here for 9 dips. So for the profit ratio you want to take, it's up to you. But I use between 1.1 or 1.3 depending on the coin. So let me just use 1. Okay. Let me use 1.3 here. I remember when I talked about what the callback is, and we have talked about the profit callback and the buying callback. So for the buying callback, since we're in a bearish market, I would use the what 0.7. Now, people have been asking, especially newbies to crypto, what is bullish market or what is bearish market? Let us go to our Binance and examine something. So this is our Binance. This is Bitcoin trading. For this is a Bitcoin chart. Now, let us look at this graph from a wider time frame. You discover the price is always tending downward. When we say tending downward, this is usually what we call the support level, and this is what we call the resistance level. Support is because whenever the price touches this level, it tends to bounce back. And the resistance level is when it touches a level, it tends to bounce back. Now, if we examine this graph for a very long time, you discover that the resistance, okay, this was in April or so, if I'm not mistaken, or May, okay, before the great fall. So if we examine here, from May till July 2nd, discover we've been having a very, very low support level at $40,000, or resistance level, sorry. Meaning, once it gets, let's look at this resistance level, 40,000, 40,000, and 30 something thousand. Let us go back and look at more. Another 41,000, it bounced back again. Now it's trying to gain momentum. So what this tells us is usually at this time of the market, the price is always tending to come downward. Once it hits a usual resistance level of almost 40,000 now, it tends to come downward again. So a bullish market is when the market tends to be on an uptrend, like it just keeps on going up, 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 up. While a bearish market is, it's just usually on a downtrend. So even when it comes up, it goes down. It's more of a weak market, comes up, it goes down. So presently, okay, let's look at a wider graph. Oh, this is where our this thing can, this is much it can take us. Let's see if it can take us a little bit backwards. Beautiful. Now, this is a perfect example of a bullish market. You can see the prices are just tending upwards. You can see this, right? You can see the prices are just on. Oh my God. You can see this is a perfect example of a what? A bullish market. So even when it comes down, it keeps on going up. You can see bullish, bullish, Then suddenly the dynamics changed and it became bearish, to what we now have to a large extent. So if you look at it from a wider aspect, you can see bullish, bullish, and eventually bearish. The trend is eventually bearish at this point in time. So let me take it to a smaller time frame for us to see it from a clearer angle. So right now the market trend is bearish, meaning the prices tend to always go down. So now that I want to set my trade using a bearish market trend, I'm entering at the present price. So my margin configuration, since I'm setting this for a bearish market, so I'm going to use a wider margin. 12 might be too small. I would use 18% or 20% because it's even possible for this price of this coin to drop by 20%. So this will be my ninth margin call. I'm going to use one. So remember I said something like this in topic theory one. I'm going to use a general one. So what at this other side, what I'm telling the bot is if the price drops by this percentage, buy one times my initial value, meaning buy $10 if I'm starting with $10. If it drops by this particular percentage, buy one times my initial value. So my first callback would be 2.5, second would be 3.8. I'm just doing this. The goal is my last one is to be 20. So I'm just using different intervals at which the market can drop. So this is 3.8. I need about 5.5. Here will be about 7.3. Here would be 9. And here will be 13. Here would be 16. Okay, this is the 15.8. Here would be 17.6. So this is it. This is what we have here right now. Now, the main important one is my ninth margin call because I'm like, we're in a bearish market. As such, it is possible for the market to go deeper with 20%. And even if the market goes deeper with this certain percentage, I still want to have USDT to be able to buy. I don't know if you understand. So I'm just going to fit in the percentages so that the last one always ends in 20. So with this instruction, what I'm telling the bot is, hey, I know the market could be unfriendly, you know, once it gets by this deep, buy so and so corresponding value. Now, people have been asking, can I use the bot for a bullish market? Presently, the market is bearish. As I said earlier, it's always tending to go downward. So for those who have been asking, can I use this same bot for a bullish market when the price is always going higher, higher, higher? And the question or the answer to that question is certainly yes. You can use it for a what? A bullish market. Meaning, even if the price is on a high trend, you can still use this bot. And how do you do that? Now, first of all, let us look at this market. So let us go to Binance, for example. Remember, we spoke on a bullish market. So this is a bullish market here, or a sign of bullish market as we have seen earlier. So you can see the market going up, up, up. But let me open it for you. Let's come back here. Even this market, as it's going up, as it's going all bullish, as you can see here, a candlestick does not just rise, all in the name of being bullish. No, there's always a rise. There's always a rise. You can see it coming. You can see it coming down. Even when it goes ahead, there's a rise, there's a retracement here. It comes down, it retraces, it goes up. So if you're looking at it from a wider graph, if you pinch this now and you look at it from a wider graph, you would just say, oh, it's what? It's going up, right? But when you now expand the graph, or you expand it a little bit, you now discover these different retracements, which is, the upward, the upward, and next thing you can see upward, upward, upward. There's a retracement, another upward movement, you know, another upward movement, and a retracement. So are you saying it? So even in a so-called bullish market, the price of a coin still comes down. It does not just go up once for those of us who have been making that mistake. So with the real keyboard, you can trade on a bullish and on a bearish market. The only difference probably would be the um, size of your margin call. Remember, this is a bearish market. I'm using 20, so meaning it's possible for the market to drop by 20% or more. So, but if it's a bullish market, for example, you can now reduce your margin calls. You can use 10, you can use 8. First of all, like I said, you need to see the market and at least ask yourself some certain questions. What is the market saying at this point in time? So meaning is you can easily change your settings to suit whatever market you are trading with. That's just the clue there. So I'm going to click on confirm here. So I've clicked on confirm. Then remember this distributed aspect here. I want to I want to work on it. So remember, for those who watch topic 3, remember what we said about here now. So it's the simple instruction is, hey, if a bot, for example, buys at the fifth margin call, remember our fifth is minus 9%. Like the example I gave earlier. So let us say this is our bot. Excuse me. All right. So the first one is here, the second buy, the third buy, the fourth buy, the fifth buy, and the sixth buy. Now I'm telling myself, if the bot is buying 1, 2, 3, 4, I've been telling it I want to make 1.4%. But if it goes as low as this 5th, 6th, 7th, 8th, and 9 to this point, definitely if it's going to rise, I know definitely it's going to rise at least something higher. So I am not looking for the same 1.4% on this 5th to 9th margin call. I'm looking for something higher. So since, remember, no, they say it has gone very deep. So at least if it's rising back to this level, it should be able to make more profit for me. So I'm saying whatever coin I buy at the fifth, sixth, seventh, eighth, and ninth margin call, I want more percentage profits, and it is here I can set that this place. So here I can decide to use, rather than for my fifth position, rather than getting 1.3, I can decide to use 2.3. For my sixth position, I can use the same thing, 2.3. For my seventh position, I can use 2.8. For my eighth margin position, I can use 3. And for my ninth margin position, I can use 3.5. So this is the profit I want to take on these different positions. And I'll click on confirm. Then we'll just explain what the profit callback is and all that. So I will just click on this main confirm here. Like I want to confirm all my settings up here. So I'll click on confirm. So after clicking on confirm, to let the bot know I want to use this new feature, that's the feature of those different, what I explained on the 5th to 10 margin calls, like different profits ratio. I'll click on this sub bin mode for the bot to be aware that yes, I want to use this new method. So once I click on sub bin mode, I'll confirm this and I'll start my trade. Very simple. I've set a trade on a particular coin, and that is it. So basically, as simple as that. So I think with that, we can now get to understand how trades are being set. So automatically, it deducts from my USDT, it buys the coin, it has bought the coin. You can see here, there's a new buy in dots. That's what it has bought already. So basically, should be the end of the presentation on this aspect. We'll now go to the last and the most interesting aspect. How you can make $1,500 within a month. Is it possible? Have I done it? And can you do it?